Alright, thank you guys so much for tuning into today's live stream. It is June 6th, 2025, and to begin today's live stream, I do want to take a look at the economic calendar here. So we have NFP, which came out to be 139,000 new jobs, compared to previous 147,000. So it is we did shrink in growth, but the growth is still there. As you guys can see, the unemployment rate also stayed the same at a whopping 4.2%, the same as the previous year. And yeah, I mean, everything looks, it doesn't look too bad for the economy, to be honest. Like the data that's being showed, the only the deficit that we're running here, goods trade balance actually decreased from 163 billion to 87 billion, which means that the deficit shrank. Still negative, but I'd like to see that. It gives us confidence. It gives the consumers and just gives us more confidence. So I'm not too sure if we're gonna get rate cuts this upcoming. When is the federal FOMC? FOMC, I think, might be the week after next week. Yeah, so FOMC is going to be the week after next week. Is there anything else I want to mention? So India cut the rates. Russia cut the rates. I heard the European Union also cut their rates 9 times in a row now. Let's see. Yeah, I mean, that's pretty much all I have for the fundamentals. To begin today's, I guess, to going into today, the previous daily candle was this down close candle here. And with the way that we closed on this daily candle yesterday, the easiest assumption for me to make here was that we were most likely going to take out the daily low, which is denoted as that green line. So this prices here actually took out the daily low yesterday whenever we opened up during the Asian session. So as you guys can see, we opened below the previous day low actually, and yeah, so we completed the daily objective. What does that mean for me coming into today? Well, because we completed the daily objective, which was the daily low, I can't rely on the daily time frame anymore. And I think for me, the best approach is going to rely on the 8-hour time frame and the 4-hour time frame. So just like yesterday, gonna rely on these 2 intraday time frames here during the morning. So depending on how we close here on the 4-hour time frame and the 8-hour time frame will give me my morning bias, right? Either I'm gonna target the 8-hour high and the 4-hour high, or if we close bearish on this 4-hour candle, then I'll target the 4-hour low and 8-hour low. But that really depends. In about 24 minutes or so, we will close on the 4-hour candle and the 8-hour candle. So that's kind of when we'll get more of a clear objective. But as of right now, it looks like we're probably going to take out the 8-hour high and 4-hour high. One more thing that I do want to mention is that today is a Friday, and so Fridays are the last trading day of the week, right? And if we think this in terms of power of 3, so the open, right, every single candle's open on a weekly time frame is going to be the Sunday's opening price. And then typically, if this is going to be an up close candle such as it is here, on our weekly time frame, we have the manipulation. So we manipulate lower here coming into the week, and then we expand it higher, creating the high. And then on Friday, Thursday, during the last trading days of the week, right, we're going to create the closure, right? A candle doesn't always expand, and the idea coming into today is that we should be around somewhere in this range, right, in this little blue range that we make. So the 0.2 to 0.3 is typically where we close inside a candle. So we typically retrace back into the 0.2 to 0.3 of the dealing range. And so that's kind of the idea that I have for today. I just have to keep in mind that today is a Friday, so TGIF means that we should close within this zone here, within this little blue box. It's not a definite that we will close inside. It's just higher probability, right? And so yeah, TGIF, just wanted to mention that. Did we close within the range here on? So like on the monthly time frame, notice we closed within that blue box previous month. So notice that. And like I said, this happens a lot. It's just watch for where we close today, to be honest. And yeah, that's pretty much all I have for the technicals coming into the morning. Like I said, for me, I'm just gonna wait until a 4-hour candle closure and the 8-hour candle closure for me to really confirm a bias. I don't know why these, it keeps inverting, but I see here. Okay. So this is where ES is, and actually which is this is previous day high here on ES. This is previous day low. So we didn't take out previous day low here on ES, and it looks like we just took out previous day high here. And as you guys may have noticed, we didn't take out, I don't think we've taken out previous day high yet on NQ. So there is a SMT divergence right now between NQ and ES. That's interesting to see. So because there's this SMT here between NQ and ES, if we begin to see a reversal, if we begin to see bearish price action, then it's actually completely fine that we do see that, because typically a strong swing high or a strong swing low will be accompanied with SMT. And like I mentioned before, right now we do have SMTs, and yeah. so this is something that I do want to watch for. All right. Previous month's high was also taken here on ES. Yesterday we took out previous month's high here on ES, which was my objective for the month. Just we never really got an opportunity to align ourselves with that, so kind of sucked, but it happens. Yeah, I mean, today, for now, I'm just gonna continue to wait for how we close here on the 4-hour time frame and the 8-hour time frame. Let's take a look at Tesla's shares actually. So Tesla, we did have we sold off a decent amount yesterday, to be honest. So yesterday, after we took out that MSS, we moved 94 points. And 94 points Tesla is that's a lot. And this move lower here is there's conflicts between Elon Musk right now and Trump. I think Elon doesn't really favor the new tax bill that Trump is coming out with, Tax Cut Jobs Act, which essentially is going to add a lot of debt. It's going to add 2-something trillion into the national debt, and which is going against the whole idea of why Elon Musk was a part of the Doge Department of Government Efficiency, right? His whole idea was to lower the trade deficits and lower the debt. And with this new bill that Trump's going to come out, I'm not too sure what the whole game plan is here, but it's going to add a lot of debt. And the way that they're going to sugarcoat that this bill is not going to cost us a lot is by cutting spending on Medicaid. I think they're gonna make loans. They're gonna really enforce the loan paybacks and stuff like that to offset the cost of the bill. But I really don't think. I don't know. But yeah, this is kind of why we're seeing this kind of larger sell-off on Tesla. Alright. And let's see, CRD. Where is Planter? See where. Yeah, it's been going pretty high actually. CRV, CoreWeave. Wow, CoreWeave is at 147? That's crazy. When we open, I remember I was watching this company's open and it was at $40. Now it's at 146. Wow. That's a decent amount. That's a lot. TLN, this is a energy company, also increasing. VST, which I do have shares in, is increasing, which is good to see. SEG, I think. Yeah, overall, everything looks decent. Treasury yield rates went from a 4.41 to a 4.5. So yeah, just at the beginning of April, and I think this is probably due to tariffs, they kind of shift here. But yeah, we went from a 4.41 to 4.5 pretty quickly, to be honest. I mean, I'm hoping that these things don't trade based off of like ICT concepts. I really don't want to see like this happen, because that would suck for the yields at least. And like this chart here on the 12-month time frame on the 20-year yields isn't ideal as well. Same thing here on the 30-year yields. We'll see. We have about roughly 12 minutes left until the 4-hour and 8-hour candle closure. Before then, I am going to elect to go into a chess match to just try to see if I can find anything to do. Keep me active. Typical London setup. Looks like he might give me the middle here. Check. Interesting. I like to go here. Good. Go here. Develop. Looks like he's probably gonna try to take. Go there. Nice. I really don't like how he can just do this with his king. So I'm gonna bring up my king, my own king actually, and go for an attack. Maybe like give him a check here to force him to bring something out, or he can just castle right now. So he opts to not do that. I'm gonna check. Let me go here. I was kind of anticipating that. I don't like. I don't really want to castle into. I'm gonna try to attack because he can't take this. Okay. I'll trade this actually. Awesome. We'll go here and castle long. I mean castle short. Looking to castle short. It's fine. Oh wait, I can't do that actually. I have to do this. And I'm probably just gonna cancel here. Oh wow, look at this. A double whammy. Should probably go here. And then okay. If I don't castle, he's gonna take my rook. And if I do castle, he's gonna take my knight. So now I'm in a pretty oh man. I think I just have to castle. You're gonna do this, yeah. Okay. Yeah, bye bye. Boys, it doesn't look too good here right now. Looking at this so far, looks like we're gonna close on. We're looking pretty bullish here on the 4 hour. So I could target the 4 hour high. That would be my morning objective. Bye, man. He just goes here now. Oh, he opts not to. It's very interesting. Okay, well, I'll just go here. See if I can force anything out. Attacking that again, bro. And I'm just down tonight. This kind of sucks. Yeah, this sucks a lot. I mean, I just have to just really try to come back here. It's gonna be pretty hard. Far away. Gotta come there. Check. Check. Mate. Oh my gosh. Wow. Oh, dude, that was actually a crazy comeback. Oh, it was pretty even here, huh? Oh, wow. So he messed up. I wonder if I did a trade. That. I mean, could I have just sacked my... Just move this. Oh, what? Oh no, that would... Here? No. That's not the move. Oh, here maybe? I don't know what the best move in this situation would have been. It could be this. Who knows? Well, let's continue to watch. Like I said, the way that we're closing here on this 4-hour candle and this 8-hour candle, it's looking pretty bullish. Objective for the morning is going to be the 4-hour high. However, notice how even though that I'm bullish and I stated that the 4-hour high is my morning objective, this 15-minute time frame here, this 15-minute candle isn't exactly aligned with bullish prices, right? It doesn't really necessarily support the idea of higher prices. With the way that we're closing here on this 15-minute candle, appears to me that we most likely will take out the 15-minute low, and so the 15-minute time frame is bearish, 4-hour time frame is bullish. There's a misalignment, and same thing here on this hourly time frame. So hourly, 30-minute and the 15-minute. I mean, this hourly time frame, because this hourly candle is closing above the previous hourly high, this to me means that we should treat this hourly fair value gap as a breakaway gap. So I don't want to see us take out the hourly low, and so I would like to see us take out the hourly high. And yeah, so I think it might just come down to the 15-minute time frame, right? The 15-minute time frame is rather indecisive, and yeah, I mean, we could end up taking out the 4-hour high. Like I said, it could happen, but yeah, I would have liked to see a more bullish 15-minute candle closure, but just pay attention to that candle right there, the 4-hour time frame. 4-hour candle is bullish, right? The way that we closed, it makes sense for the next 4-hour candle to open, maybe manipulate here, take out the 4-hour high, and because there's an SMT, if we see a reversal, that's completely fine too. But all I'm targeting is this move right here. It's this portion of the move that I want, which is for us to attack that 4-hour high. And so, yeah, that's my morning objective. Let's take a look at the 8-hour time frame. Yeah, so the 8-hour candle closed bullish, and easy targets are the 4-hour and the 8-hour high. And yeah, so that's gonna be the morning objective for me for today. I want to take a look at some of the pros and cons and actually go over a trade that I took yesterday. Hopefully this is like, it gives you guys some more insight of how I view prices, right? It's it's a pretty simple way of approaching price action. It's just you have to be disciplined enough to actually follow the game plan that you have for yourself, right? I do want to see this. There was no fair value gaps for us to use. No fair value gaps. Interesting. Okay, so the pros and cons for this week are, I'll go really brief over this, but it's to continue to take consistent trades, right? Require a higher time frame objective, a model, and an entry pattern. You guys are going to see more insight on these three components, but essentially these three aspects are what makes me consistent, right? Because I require these things, because I have to identify those three ideas or those three aspects before a trade even occurs. That allows me to be consistent, right? Second, utilizing a model to align myself with the higher time frame order flow. So even if I have an idea of where prices wants to go, if I don't have a model to align myself with that objective, then there's no reason for me to press the button, right? If there's no model, which means that one of my components are missing, then I can't press the button. It's as simple as that. Another thing that I do want to mention about the whole concept of aligning your model with your higher time frame order flow is that your model should be on a time frame that's relative to your higher time frame, right? So let's say your higher time frame objective was on the 4-hour time frame. Then your model should be on the hourly time frame or something that's kind of near that 4-hour time frame, right? You can't go from the 4-hour time frame and straight onto the 1 minute time frame for your model, because the 4 and the 1 minute, they have a very a low correlation. If you were to, let's just say that you were to use maybe the weekly then as your higher time frame objective, then your model could be on the daily time frame. But if you go from the weekly and you go straight onto maybe the 1 hour, then like I said, the correlation between those two time frames just, it goes from like the weekly to the daily being like relatively close. But if you go from the weekly to the 1 hour, then the correlation is like this. You don't want the correlation to be this big of a gap. Imagine that's like reading a book and you read page 1 and then you skip all the way to page 50. You're missing out on a lot of information. You don't know if there's been new characters that's been introduced. You don't know if there's new plot, whatever. But essentially, that's the concept, right? You kind of want to go down in time frames respectively. Reading page 1 to page 2 to page 3, etc. Third, use the lack of S&T to your advantage. Like today, coming into the morning session today, I pointed out that ES, we have taken out the daily high, whereas NQ, we did not take out the daily high. So what does that mean? That means there's SMT, there's some sort of manipulation between the indices right now. And if we were to see a reversal, that's completely fine because of the presence of SMT. But if there's a lack of SMT, if there's no SMT, then I'll be more inclined to see higher prices. But yeah, so that's the whole idea of using SMT before a trade and during a trade. If you're in a trade and there's SMT, so let's say that I'm targeting, let's just say that I was able to find a model for me to target the 4-hour high, and I'm taking it on NQ, and while I'm in the trade, ES takes out the 4-hour high, whereas NQ is still lagging behind. It still hasn't taken out the 4-hour high. Because ES has taken out the 4-hour high and NQ didn't, there's a presence of SMT, and that means I have to either move my stops to break even or close the trade completely. Last but not least, know when to pivot. Pivoting is like not switching, but like utilizing all of the time frames to your advantage. So like I mentioned before on the daily time frame, the daily objective has already been completed, right? So I can't force anything else on this daily time frame. And so because I know that I can't use the daily time frame, I'm going to pivot onto a lower time frame, such as 4-hour, 6-hour, the 8-hour, or the 10-hour. And then if those time frames, if the 4-hour, 6-hour, 8-hour, 10-hour objective has been completed, then I pivot once again. I go onto the 1-hour. And the reason why I'm able to pivot onto like all of these time frames is because every single time frame, every single candle has an objective. There's going to be a reasoning for prices to continue in this direction. There's every single candle is going to present you with a open high low close, and whether you should be targeting the high or the low, or if the candle closure is too indecisive, then you don't force anything. It's as simple as that. So I think it takes a little bit of experience, but just try to pivot, understand when time frames have completed their objective, and and so that brings me to some of the cons, or I guess some of the things that I can improve on, some of the things I can work on, and that is just to be active, right? Every single 15-minute interval, there's going to be a new 15-minute candle closure, and that allows for there to be a new objective. Every single 15-minute candle has an objective, right? And so if I know that, I should be checking maybe the markets every single 15 minutes because there's a new objective present. And to really summarize everything up here, for me, to be consistent is my number one. That's one of my main core values is to be consistent. And like I said, that requires a higher time frame objective, a model, and a entry pattern. Second, if there's no model, there's no reason for you to really be forcing anything. So third, utilize SMT before and during a trade. And with that, that's gonna pretty much wrap it up for the pros and cons. I'm gonna go more into depth of what a higher time frame objective is, a model, and an entry pattern is very soon. Give me 1 second. All right. So the trade here from yesterday, was based off of how we closed here on this 15-minute time frame in respect to where we are in this dealing range. So dealing ranges could be on every single time frame. Like I said, prices is fractal. Every single time frame is going to have an objective, and every single time frame will have its own dealing range. And there is a 15-minute dealing range here that I screenshotted. So from this 15-minute swing high to this 15-minute swing low, there is a dealing range. And notice, we haven't had an opportunity to retrace back into the discount of this dealing range. And the whole idea of the dealing range and targeting the discount and premium is based on the concept of buyers and sellers, right? If you're a buyer, you're going to want to buy prices when it's in discount, whenever it's cheap. As a seller, you're going to want to sell things when it's in premium. And market efficiency entails that prices are always going to draw towards the market equilibrium, which is the point where it's efficient for both buyers and sellers to be, I guess, interacting at, right? It's that equilibrium price point. And like I said, I'm targeting this discount here. And if I'm targeting discount, that means I want to see a reason for lower prices. And this 15-minute candle here, notice the way that we closed. It's a down close candle. It's pretty bearish. And you're anticipating, or I'm anticipating, that within the next 15 minutes, we should take out the 15-minute low. And so I zoom in just to show you guys a little bit more in detail here that, like I said, this 15-minute candle here, bullish. The 15-minute low is the model's objective, but we should expand lower after taking out the 15-minute low towards the discount of this dealing range. And the reason why I have this 30-minute, and hourly, and 4-hour included here because I wanted to mention that I'm pivoting here. I noticed that I can't rely on any of these time frames, the 4-hour, the hourly, the 30-minute. All of those time frames aren't really providing me an objective, so I have to pivot onto the 15-minute time frame. And so now that I have a model, now that I have a higher time frame objective, I am looking for an entry pattern. And I noticed that there's this 1 minute fair value gap here that supports the idea of lower prices. So if we rebalance into this 1 minute fair value gap, we should respect this fair value gap to continue lower. And so you guys are going to see here in the next slide that we begin to kind of get this retracement back into this fair value gap. Once we rebalance into this fair value gap is when I took my entry. So I took my entry as soon as we trade into this fair value gap. And the first target for me is this 15-minute low. After we take out the 15-minute low, I move my stops to break even and I allow prices to trade towards the discount of the dealing range. And yeah, so that's pretty much the entirety of the trade. It's pretty simple. There's 3 components: higher time frame objective, a model, entry pattern. Notice how all of those components are essentially suggesting lower prices. The higher time frame objective is for prices to trade back into discount, and discount is below. Below means prices should go down. Down means lower prices. And so my model is a bearish 15-minute candle. Bearish means prices should go down. So now my entry pattern. My entry pattern is a SIBI, sell side imbalance, buy side inefficiency. SIBIs support lower prices. And so all of those components are aligned with each other, and it's like a set of gears. Imagine it's something like this where they're all rotating in support of each other. They're not really, they're not going in the opposite direction where it's not, they're not efficient. But yeah, so imagine it's like a set of gears. Everything's working well with one another. If you guys been studying ICT for a while, ICT does mention a lot about fair value gaps, and whenever I first started, it was kind of hard to know which fair value gap was going to be respected or not. And with the way that I approach prices, it's pretty simple, right? Because my objective is this 15-minute low, my model's objective, then if my model's objective is going to be the draw of liquidity, then that entitles for my 1 minute fair value gap. It has to be respected for me to take out the 15-minute low. If we disrespect this fair value gap, then that negates the whole idea of lower prices, and that's when a loss could occur. But that's why I have risk and reward in place. But yeah, so that's gonna wrap it up for today's live stream. I think that's gonna be all that I want to cover for today. Pros and cons. My morning objective, like I said, is still higher prices. I want to see us take out the 4-hour high. After we take out that 4-hour high, I wouldn't necessarily have a bias. That's when I would pivot. And if there's no time frames to utilize, the best approach is to wait. And it's probably the most easiest but hardest to actually execute because of human nature. We always want to be pressing a button. We always want the adrenaline rush. But yeah, so like I said, utilize all of these time frames. The 6-hour candle, it's going to close in about an hour and 40 minutes. For my time, Central Time, it closes at 11 a.m. Eastern Time, it's going to close at 12 p.m. Utilize that 6-hour candle to close whenever it closes. If it closes bullish, target the 6-hour high. If it closes bearish, target the 6-hour low. Same thing with the 10-hour time frame. It's going to close in about 3 hours and 40 minutes. Do the same thing. Approach it the same concept, but remember that time frames aren't the amount of time that it takes a 1 minute candle to create and the amount of time that it takes a 1 hour candle to create is different. So that means that there's going to be a different I don't know what the word is, but there's going to be different gravitas in those time frames, if that's the right word. But yeah, so I'm going to leave you guys with that. Thank you guys so much for tuning in, and until next time.